Good morning, everyone, and welcome again. I hope you had a wonderful weekend, and I hope you are looking forward to the markets and what the markets have in store for us. In this episode, we are going to be speaking about the breakdown in gold, and gold broke down to the low of the year essentially, and multi-year lows in the market, and we haven't seen this price in gold near this 1100 level ever since 2000 and looking at the chart I'm seeing 2011, and the market is has broken down out of that consolidation pattern that we were speaking about. And the last time we saw gold at this price was in 2010. So we're at a 5 year low in gold, and we're going to analyze why this is happening technically, and what to do in this situation if you are caught along this market. We're also going to take a look at the US dollar. The US dollar has been edging up ever so slightly in the last couple of trading sessions. We're going to take a look at the S&P 500. It's currently interacting with its channel top, and we're on the lookout to see how it reacts to the channel top. Okay, now if you want to take a look at the video analysis and the video charts, you can go to smartinvestorcentral.com and click on market updates, and you will see the video analysis of what I'm speaking about here today. And looking on the video analysis will definitely give you a better understanding of the charts and what we're speaking about. Okay, so let's get into gold. And last week I said that beware of gold. And gold currently is in a strong downtrend. I know there are a lot of advertisements out there and a lot of folks screaming that it's time to buy gold. But as a general rule, when something is in a downtrend, I advocate against buying it. When the market turns around and sees positive price action, that's when it's a time to be long a particular market if you want to be buying that market. But taking a look from 2011, the market was in a channel consolidation and it broke down in 2013. And we have been seeing a series of lower highs and lower lows ever since. The market was in a consolidation pattern here, a triangular consolidation pattern. And on Friday, we broke down below that consolidation pattern. And what we normally see, a lot of trading is driven technically. And when certain key levels are broken in the market, then you will see a lot of system traders come in and react to that level. And I believe that's exactly what happened this morning. And that's why we have such a sharp decrease in the market, because the market broke out of a triangular consolidation pattern that was pretty obvious on the charts, and a lot of system traders came in and sold the market, and that's why we are down so big this morning here. And so what's next for gold? Well, we're coming up on the cash market at the 1109 level, and I could see this market easily going to $1,000 or even possibly down to the 900 in 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 the next couple of months. And the fact is, with gold, the downtrend just has not been broken as yet. And that's why when you're investing, it's good not to pay attention to what the media is saying, not to pay attention too much to the fundamentals of of a particular market. If, for example, if gold is going to go up, it has to be reflected on the chart. You have to see some positive action on the chart. And when a market is moving down, remember the reason why any market moves up or down is based on supply and demand. And if you see a market moving down steadily, this simply means that the large money players are on the sell side of this market, and that's why it is heading to the downside. And an investment, your investment strategy, or my investment strategy, is that when a market is seeing lower lows and lower highs, and the large money is on the other side of the market, I'm not going to fight that market. What I'm going to do is either stay out of that market or benefit from the short side of the market. And that's why gold, the your positioning, or the positioning, is to be short this market at this time. I'm not saying that gold will not turn around. Don't get it wrong. It will. At some point, it will turn around. And then that turnaround will be reflected in prices. And that is the time I would be looking to buy the gold market, when I see higher highs, higher lows on the chart, and not trying to catch this falling knife here. Okay, so that's the analysis of gold. And remember, to see the video, you can go to smartinvestorcentral.com/market update, and you will see the video analysis. Okay, moving on to the S&P 500. What we are approaching currently is we're trading up against the channel top in mid-morning. It just, as of this recording, it just passed about 10 past 11 on the East Coast here, and the market is challenging the upper boundary of its consolidation. And in front of me, I have the SPY ETF. It's currently trading at 212.54, and the all-time high is up at 213.78. Taking a look at the index itself, we're up against that 221.26 level. And if we do get a failure around these highs, you can and a failure would be, you see a sell signal at these highs. If there's some follow through selling and the market passes below 2100 or so, you could look for 2030 as the next area of support. And if we do break below 2030, I would expect some additional selling to come in the stock market. If we're able to break above the 2150 level, then that could signal more gains in this market, and that will signal, to me at least, that the bulls are in firm control of the stock market. Okay, so that's what's happening. That's what the prices are telling us. Again, we're not following what the media is telling us or the speculation. I'm just analyzing what prices are telling us, and prices, the price action is the key to figuring out what's happening in the markets here. Taking a look at the Dow Jones Industrial Average, we're so far unchanged on the day. We're at 18,095 approximately, and we are not as close to the channel top as with the S&P 500. And the all-time high in the Dow is at 18,351. We're currently at 18,096. So there is some room to the upside to go. But we're experiencing resistance around this 18,200 level, and that is stalling out the market. In order to challenge the high, we have to climb above this swing high here at the 18,200 level. And if we do climb above that level, we will be in a position to challenge the all-time high in the Dow Jones Industrial Average. Okay, the Nasdaq has seen much better price action and is approaching all-time highs. Last week, the market broke above resistance in up above the 45.62 level. The market broke convincingly above that level, and we're seeing some follow-through buying so far this morning. and that is very positive for the Nasdaq. And we new highs in a market is always good for investors, and we are closing in on that spike high that was made back in the year 2000, and the actual spike high here is 4,816, and we're now 4,674. So we have some ways to go for in the Nasdaq. So if you are technically, this looks like a hole to me. This, if you're along the Nasdaq, it's just a hole to me. This is looking like you should be holding. Not, I wouldn't be adding to positions at this time, because now is a time that this market is in a mature stage. If you have positions, just keep them, or keep put, as they would say. Okay, overseas, looking at the German DAX, are down slightly on the day, and the market overcame the swing high up at 11,635, and that was very positive for the bulls. But the next area of, well, it was positive for the bulls because we broke out of a descending channel. As on the charts, the market was in a descending type channel, and we broke above this descending channel. And for you technical chart pattern, for those folks who recognize chart patterns, this is what they call a flag pattern. And the market was in a descending wedge, and now the market broke above that wedge, and so that's fairly bullish for the German DAX. Expect resistance at 11,920, and support is at 10,000. Immediate support here is at 10,652. Okay, so that's the German DAX. Taking a look at the FTSE, and I said last week there was some concern with the FTSE because the market was looking like it was resisting its old high, and we could be setting up for a double top in the FTSE, and that analysis is still current. We do have some recovery this month, in the month of July here, but the market is very vulnerable if we do not break above the 7,100 level, and we're currently at the 6,775 on the FTSE. So it's, and for the year, the FTSE started the year roughly at 6,566, and we're currently at 6,775. So we're slightly up on the year. The market hasn't done much for the year so far. Okay, taking a look at the currencies, and the currencies, we're having some very good movements in some currency pairs, or various currency pairs. And firstly, let's take a look at the dollar. The dollar is approaching resistance in the 97.78 level, up to the 9,800 level, and if we're able to close above that level convincingly, expect a retest of the high that was made in March near that 100 level on the US dollar index. With the declining gold, the Australian dollar is holding up fairly well so far. The Australian dollar normally follows what gold is doing, and it's slightly positive on the day so far, defying what is happening in the gold markets. Taking a look at the euro, we are up slightly on the day. The market has found support at the 10th at 108.19, and it's trading above that 108.19 level. Keep an eye out on the US dollar, Japanese yen. The US dollar is gaining nicely on the Japanese yen at 124.27. Expect some resistance in the 125.85, up at that 125.85 level. And investing in currencies and commodities is just another way to diversify your portfolio. I find that a lot of folks are equity only and stuck with equities alone, and it's unfortunate because there are some very good moves that happen in the commodities and in the currency markets that you can take advantage of, and your portfolio will be better off because you will have better diversity and greater diversity in your portfolio as opposed to just stocks alone. Because if stocks were to turn around at this point in time and have a decline, you will see that because the markets are so correlated, you will you will see a decline across the board, and so that's why when folks say you are diversified across different sectors, that's not really true diversification, because what we find, and what it definitely happened in 2008, it happened in 1999, 2000, it happens across almost every bear market. When the broader market declines, then it will drag most sectors down with it, and so you are just really multiplying your losses and holding investments across different asset classes, or sorry, across different sectors of the stock market. And that's why currencies are very good, because they have zero correlation with the stock market. Okay, if you'd like more information about getting started in diversifying your portfolio, you can go to smartinvestorcentral.com, and you'll see a section that speaks about that. Okay, taking a look at IBB, and it's a biotechnology ETF that has done very well over the last couple of years. Actually since 2009, this market was at, it bottomed out near 55. The low was at 60. Low is at 60. It's now at 399, closing in on 400. And this is almost a 500% move in an ETF sector. So that is very, very good, and the market is making a new high this morning, and this uptrend is very much intact. It's a very strong uptrend in IBB, and this looks very positive. Taking a look at Apple stock, we do get a lot of questions about Apple. Apple has recovered. It bounced off of support. Support was down near this 120, 123 level. The market bounced off of 121. It had what we call a false break, and the market rebounded and is currently positive at 131.91, and is closing in on the high that was made back in April at 134.54. Okay, so Apple is looking fairly good at this juncture. Support, if we do close back below the 120 level, that could issue in some additional selling, or some selling in Apple stock. But for now, it looks like a hold. Okay, taking a look at Netflix. Taking a look at the chart of Netflix, we see that the market is up, made a new high on Friday, and it's coming back down. Well, it made a new high, and near this one, the high that was made was at 117.88. The market gapped up last week, and it may fill this gap before moving up, but Netflix is looking fairly positive. Now, a close below 95, it's at 111. A close below 95 would be it will give me warning, it will raise a red flag here at 95, and that could be a point to take some profits in Netflix if you're along the market. Remember, when we're investing, it a lot of folks enjoy buying at the right time. The market goes up, and then they allow the market to come right back down and take away all their gains. You have to have a point where you will say, okay, I'm going to take profits if the market comes back, because you don't want, let's say you bought at the beginning of the year, you bought Netflix at 45. The market has come back up. It's still in a strong uptrend, and that's good. But if the market starts to decline, you should not allow the market to come back down all the way to 45, even 80 or 75 before you take profits on the market, because you are giving up way too much of your profits. Okay, investing is very important, and the markets can be tricky. If you would like to have a free stock investing class on that covers portfolio management, that covers how to read charts and how to invest in the markets by actually looking at the price action as opposed to the media, you can go to smartinvestorcentral.com. On the right hand side, you'll see a link where you can sign up for our free class. The class is 100% free, and it's definitely it's about an hour. It's just about an hour long, and it's definitely a good hour to spend, because it will shed light on the mystery we call Wall Street, and because Wall Street is very mysterious to folks, but what it will do is shed light on how you should be approaching the markets by looking at price action and not following the media hype. So go to smartinvestorcentral.com and sign up for a free class. Thank you very much for listening, and I hope you have a wonderful day. Thank you.